Hello, everybody, and welcome to our news market spotlight featuring the Great Smoky Mountains. We are seeing quite a few folks hop into the virtual room today, so would love to hear where you all are tuning in from. We'll give it a few more seconds for everybody to hop in and get started. But before we do, Cuauh, what are you sipping on today? Where are you tuning in from?
Hello, thanks, Corinne. Hello, everyone. Today we are tuning in from Culiacan, Mexico, and I am drinking some coffee from Oaxaca and Topo Chico from Monterrey. So just all around very global today. How about yourself?
Shoot, you're living your best life. I just started diving into an espresso machine we've had for 2 years, so I'm now drinking Americanos in the morning versus Keurig coffee, and it's changed my life. So I'm definitely not on your level this morning or in the sunshine being in Seattle, but I'm so here for it. Looks like we have ATL in the house, Serge, Buffalo, Twin Cities, Julie from California, Jim from Charlotte, Jim or Nancy. Which one of you are here today? Love when y'all attend. Huntington, Chattanooga in the house.
Chattanooga is a favorite market of ours in general. So, well,
Definitely is. Awesome. Well, we will get things kicked off here in one moment. We'll give it a few more seconds. See some people flowing in here. Cleveland, Ohio. Love to see it. Go Buckeyes, OHIO. Wonderful. Also, all right, Cuauh, we ready to get started?
let's do it.
Wonderful. All right. Well, Cuauh is joining us again today for walking through a new market that we have, and he is our Director of New Investment Channels. He's been on quite a few webinars to date. And then we have Jake P., our Head of Operations. Jake's on a myriad of different webinars over time. He's been with the company for quite some time, close to inception. He will be in the chat, as he just mentioned, in answering any questions that you all have, as well as teeing them up for live Q&A. One thing to mention is we're hyper-focused for this webinar on questions that correlate specifically to the property new market, since Cuauh is the expert in this space. So we'll be gearing towards those, but if you have any additional questions, we can definitely walk through those in chat as well. And I realized I missed our cool slides here. And again, my name is Corinne Headland. I lead our investor relations team here at Arrived. So thrilled to have you all on the line today, and thanks so much for joining us. Before we get started, just wanted to walk through a brief agenda to make sure we're all aligned. So I'll walk through market and amenities, the why behind the market that we chose, and why the property is phenomenal. 2, underwriting process, the property management company that we chose to partner with, which is absolutely phenomenal. And then we will jump into live Q&A. Jake will come back up to the stage at that point too. So we'll get things kicked off here. Cuauh, I'm going to kick it over to you.
Awesome. Thanks, Corinne. Appreciate it. Super excited to present the Regal today. This is a gorgeous property. I'll start by describing the specs of this unit, but it's a 5-bedroom, 4-bathroom, 2,765 square feet, built in 2018, very new, right in the heart of the Great Smoky Mountains in Sevierville. Very excited to talk to you guys through the market, why we selected this property, and as Corinne mentioned, our awesome property management partner as well. Before we get started, the Great Smoky Mountains is an incredible market for a couple reasons that we'll get into in a bit as well. First, a very popular market. This is the Great Smoky Mountains National Park is the most visited in the US and very drivable. That's one of our vacation rental theses as we go through the year. We want accessible markets. The Great Smoky Mountains particularly is 3.5 hours from Charlotte, 3.5 hours from Nashville, and 4.5 hours from Atlanta. Very accessible from very large urban centers. And these pictures honestly don't do it justice. It is a gorgeous, just nature embarked filled market. So, I mean, for those who've gone can attest to it. I personally have yet to go, so I've tried to immerse myself in some VR experiences in the Great Smoky Mountains overall. But very excited to have our first property in this market. We'll get into the numbers in a bit as well, but very strong revenue figures in this market. For the size and the area where the Regal is located, we are seeing average monthly revenues of in the 10,000s. Obviously, over the last 2 years are an exception, but even before that, one of the things that we'll talk about as well is how tourism growth in the Great Smoky Mountains was, how that was coming along even before the last couple of years. Going back specifically to the Regal, Corinne chime in here as well, but it has an awesome balcony with forest views. It sits on 3.4 acres, so plenty of land to get your privacy. We're still trying to figure out what awesome things we might be able to do with the surrounding lot. It has a driveway for on-site parking, has accessible roads, especially in some of these rural markets. That accessibility factor is very important. 5 bedrooms, awesome for larger groups. Has a large basement at the bottom where the garage is, that we're going to convert to a game room, and we'll show you. I don't know if we have pictures of that specifically, but we'll show you what we're aiming to do with the property. And then location. We're 10 minutes away from local restaurants and trails, and 20 minutes away from Gatlinburg, Dollywood, and I believe like 22 minutes away from the Great Smoky Mountains National Park itself. So obviously lots of nature, lots of things to do in this area. Location, I always say if location is important for real estate, it is hyper local for vacation rentals. And so we work with our partners, we work with our trusted agent network to try to pin down and determine what are the best locations for our properties, and we'll go through the process in a bit as well.
Yeah, I will say this is like 11 out of 10, one of the most places that I wanted to visit because of the hiking. And there's plenty of hiking, fishing, horseback riding. I will say too, the fact that it's 20 minutes, I love the idea of being able to hop out, hike for the day, come home, cozy up on the couch, and it be quiet, and then hopefully surrounded by a larger group of people. Anytime I see options for like 6 people to sleep on bunk beds, it makes it so much easier. So I love the design. I will note too, these are virtual staging photos that we have, which are also on our website right now. But there's kind of 2 things I look for when 2 or 3 when choosing an Airbnb or a vacation rental, and its location and aesthetics, right? I want to go somewhere that like feels like home, but isn't home, and is very clean and approachable and accommodating. So all the amenities in this property are absolutely beautiful and very accessible.
Corinne, do you hike?
Oh,
Do you hike, or do you do any of the nature things too? It sounds like you do. I believe you were
I
telling me
do.
earlier.
Yeah, I was proposed to at the top of Angel's Landing in Zion National Park. I went to school in Montana for a bit, so I learned how to fly fish and do all the things. So this is like very much my cup of tea to visit this place. And I saw Serge mentioned hiking and moonshine.
Yeah, great events and things to do in the area for sure.
Yeah.
Awesome. Well, talking a little bit about the design itself. Obviously, you guys see the logo here, and we'll talk about a partner who's helping us also design this place. But you'll see that, as Corinne just mentioned, one of the important factors for vacation rentals is the aesthetic. You want to feel like you're in the market that you went to go visit, right? Like these are vacation rental markets, and so they need to feel like highest quality, just warm feelings. I love this bed picture on the right side here with the antlers. Obviously not real antlers, but it makes you feel like you're in the market that you're in, and that's exactly what we're going for. Corinne, I think you're probably more aesthetically driven. What are your thoughts on some of these in initial mood boards that we received?
Yeah, I'm a sucker for good finishes. And I see Cameron Wu, our VP of investments in the chat today, has heard me say this a lot. But when you're swiping through and choosing a vacation rental, this makes or breaks oftentimes why you choose it, other than like price, and then the reviews as well. I would choose this home if I was swiping through automatically. And what, to Cuauh's point, this is actually a mood board that we just received from Avantstay, who we're going to chat about shortly. But how many pages long was that? Wow, I want to say it was over 20.
It was definitely over 20. That's one of the things that we liked about working with the partners that we do in general is the quality of work that they send us over. I mean, this is not just a quick SketchUp. This is a well thought out, taking into consideration what the property looks like inside as is, and then trying to match and find things to furnish it. Obviously, furnishing with the highest ROI items that we can get.
Yeah, I'm very here for these finishes. I think there was another point of that deck that we didn't add in, but they were matching different stone to the textures and
Mm-hmm.
colors, and like
Exactly.
thinking how everything like talks to each other. And you pay attention to those little things when you're choosing a property. I love the natural light and what it provides, and then I believe this one has a front-facing porch where you can look out over the mountains as well. So all I can envision is waking up in the morning, grabbing a cup of coffee and sitting on the deck, heading out for a hike and coming back and being able to immerse myself in a beautiful spot in the Great Smoky Mountains. So to Cuauh's point, we love the partners that we have that provide high level experience in terms of design.
Awesome. Appreciate that, Corinne. And then just talking through the underwriting process. This is something that we mentioned with long-term rentals, and this is our process. Very similar thought processes, deep dives that we do into any asset that we bring on. But this is sort of our six-step process. So the first thing is our top of funnel. Where do we get these properties? Obviously, everyone has access to the MLS. We've developed a very strong agent network where we get, sometimes off-market listings, people that are just thinking about selling. So we might get firsthand at looking at some of these properties, and we get these agent lists on a daily. And so we're every day looking at what is the existing inventory, right? Market is shifting, inventory is low. There's a lot of things going on. How do we make sure that we have access and tap into everything that's out there so that we can have the best chance of selecting the best properties? The second is obviously running the top of funnel through our industry tools, data services that we are plugged into, trying to narrow down, from the hundreds of properties that we have all the way down to, things that might work. That's sort of that second filter. And then third, analyzing specific pro forma items. What is the expected rent? You're looking at actual comps, right? With vacation rentals, you cannot just go on AirDNA and plug something in. You cannot just go on any platform, plug something in and take those at face value. You need to really look at what are the comparable properties in the area that you'd be able to compete and, obviously what we're attempting to do, overperform. So rent, property taxes, HOA fees, insurance, all of these different aspects, some that are within control, within your control, others that are a little bit less out of your control. But how do we make sure that we at least have a good grasp and understanding of the potential yield of this property? Next, we have visualizing. So we take a look at the properties, as Corinne mentioned. We take a look at satellite imagery. Where is the property located? Video walkthroughs. We want to make sure that the property is at the very least in aesthetically good condition. Obviously, we'll later do an inspection and deep dive on that, but we at least want the property to look and feel like a vacation rentals. I mean, for whatever it's worth, the nature of vacation rentals, when you go on Airbnb, what's the first thing you take a look at? You take a look at how the property looks. What are the amenities the property has? So we need the properties to look and feel the part. Next is levering. So we determine, what's the optimal finance structure? What is the amount of leverage that we can assign to this property to deliver the returns that our investors expect and that we hold ourselves to? And lastly, refining. So at this point, these are conversations that we're now having with our partners to determine what is the FF&E and property improvement budget. What is the condition of the property? We go through the inspection process. The refining piece is actually when we're under contract. And so we essentially give ourselves a period of time to deep dive even further on aspects that we weren't able to just get online. A lot of that is inspections. What are the amenities that we'll need to add? What does that FF&E, OS&E budget look like? And that's the refining piece. So just a little bit about our underwriting process. And we see that reflected in this example here for the Regal. We have we've pinned down a conservative gross revenue of 145,000 a year, which is an average daily rate. That's that ADR acronym there at 615, and a yearly average occupancy of 65%. Again, these are figures that we receive from actual comparable properties in the area that we can pin ourselves to, in a conservative manner. Myself and the rest of the team, one thing that I will applaud us for is we're very conservative. We understand that there is a shift in the environment, and so when we underwrite, we take that into account. And understanding that these past couple of years of Airbnb performance have been anomalies, right? Hopefully they continue to grow that way, but we need to understand the market and world that we live in, and so we're very conscientious of that. Controllable expenses. These are things like maintenance and utilities. Again, conservative figures. Maintenance we expect to be lower here because it's a 2018 property. Obviously, there are turnovers and things that will require maintenance, on a monthly basis. But we are, this is the amounts that we've assigned here. Utilities, obviously, our guests will be using the utilities as they need, but there are smart devices we can add to the homes to keep an eye on utility spend, right? When the guest left, did they leave the lights on? What can we do to address and reduce those costs? Our property management fee that we've negotiated with Avant State, 20%, and then our PM fee of 5%, and that is to help sponsor like our marketing efforts, everything that we'll do. So we'll essentially play our internal property management role on top of our in-market property management, and so that's what that fee is meant for. Uncontrollable spends are taxes, insurance, HOAs. Those are what they are, right? Taxes, obviously, we're going to need to pay those. Insurance, I'll take a quick sec here to just highlight insurance, especially in some markets, Florida post hurricanes. There are some spikes that will, impact what we're able to get. So obviously, those are things that we just can't control. We'll shop around for insurance, but we at the end of the day, we need to make sure that we have the coverage that we need for all our properties. And then HOAs, when they exist, they exist. In this case, the Regal has no HOA. And then going down to purchase price and rehab FF&E, that's what I mentioned on the refining point. That's what we discussed with our PMs. Quick note on purchase price, and I can't hold myself to it, but 950,000. We got this property at $270,000 below list price. That is an incredible feat. Obviously, as I mentioned earlier, we take a look at a lot of properties. We understand that market is shifting, and so our offer approach and how we go about the acquisition is very very hard set on making sure that we get these assets at the best price possible, in a given time. So very excited to have gotten this property at this price point, given what we expect to be able to yield in the coming years.
Yeah, Cuauh, we've talked about that often on webinars, and then we've always had folks ask of like, how conservative are you really? Like, what are the numbers? And so being able to put obviously a dollar amount behind the due diligence that you and your team have done goes back to all the tools that you're utilizing, but that human touch to be able to come in that far under asking price, especially with where we are right now. So you don't see that fluctuation happen very often. So huge feat. Definitely appreciate you walking through this model to give folks on the line an idea, John, and we'll get to your question too at the end here.
Awesome. Now, very excited. You already gave a sneak answer previously, Corinne, here, but our property management partner for this property is Avant State. Not sure how familiar you guys are with Avant Stay, but it is an incredible, team overall from everyone that I've spoken to, and the quality of properties that they manage. They're very selective with what they take on, with what they manage, and so we're very excited to be partnering with them in this one and starting that relationship for future properties with the same caliber in the markets that they manage. A little bit of on stay. They manage over 600 properties exclusively in over 70 cities, which I believe 70 cities in 39 markets. But obviously, a market can be comprised of different cities. And over 450,000 guests so far. They're very, they're pretty much a very premium brand when it comes to vacation rental management. They handle a lot of things that other teams may not. They're very focused on the experience, which is a big piece. One of the I think the two biggest pieces for vacation rental performance is the aesthetics, what the property looks like, and the second is the service, the experience that you'll receive from the management, from the team. Very, very important. So, these are some of the things that Avant Stay covers. Obviously, they'll disperse to over 65 different channels. They will incorporate the smart technology that I mentioned, keeping an eye on utility, energy spends, and the policies that one would expect from vacation rentals, right? No parties, vetting your guests, making sure that, if something does go awry, that guests are held accountable. And Avance has proven and demonstrated this over and over again. I do encourage you all to take a look at their website, and we're excited to see the Regal there very shortly. Corinne, have you stayed at an Avance property?
We were going to have our elopement at an Avant Stay property along the Oregon coast. We opted to go further down the coast for a different Airbnb, so I have not. I did just drop a poll for folks, and it's interesting. 96% of folks have not stayed at a property managed by Avant, and 4% have. So we definitely have a lot of opportunity here. I know this is number one on my list. And this is pretty cool with this chart too, because it's essentially Avant's going above and beyond on all of these different categories compared to what you would see in the industry standard and self-managed. I think there was another, like this had a multi-layered chart, Cuauh, that we couldn't fit on this deck today. But a couple other things that I also love are best-in-class care year-round, in-house housekeeping and local maintenance. I know you've seen this too, but like there's other property managers that outsource, and there's always something to be said for having it in-house, or for our case where we're able to partner with exceptional partners like Avant Stay, where they handle all of this under one roof, and then commercial grade insurance as well. So it goes back to when you're talking about no parties and paying attention to that. And then of course, from like our partnership perspective with them, we have a dedicated person to work with. We're not just a number to them, which is pretty phenomenal. So hopefully for everybody on the line, you'll have the opportunity to stay. And I can't remember if we covered this, Cuauh. When will this property be ready? What's crucial about having it, like getting it right now?
Yeah, that's a great question. So I think we mentioned this before previously, but there is a timing factor as to when you acquire properties and when you get them ready. When you launch them, there is a window of time where the algorithm sort of cut your new property a break, and they'll sort of post it at the top. And so you really only get that opportunity once. So when you launch a property, you need to make sure that it's at the right time. So the good thing about the timing on this one is we are acquiring it now. We will be working with the Avant Stay team on designing and getting the property ready. Should be ready by late February, early March, but we expect to launch in March because springtime is actually when occupancy and guests start to pick up again. January and February are actually very slow. So the fact that we will get this property ready right as things start to pick up again is very exciting about this one specifically. But timing is a big one as well. I mean, I don't want to get too much into the weeds here, but you don't want to acquire, ski properties in the winter because that's when the existing owners are making their money. So if they do sell, they're going to want to sell at a premium, and so you kind of want to buy those properties in summer and vice versa. If you want something that does well in the summer, you don't buy in the summer. So this one, very excited to be launching, in March time, right when things start to pick up, and obviously Avante and our team will be making a big push to ramp up. Right, vacation rentals do have a ramp up period at the beginning, and so we'll be doing that combined push on this.
Definitely. Yeah, absolutely phenomenal. Obviously, there are some properties that you don't want to pass on, but I will say, Cuauh, you've walked through the strategic approach of your team and what you're aiming for based off of seasonality. And this is a prime example. Like Cuauh mentioned, aiming for March, we showcase that on the property page as well for all of them. So you have an idea for the vacation rentals. For long-term rentals, we show different statuses where they are within the process of getting a tenant. So we have some awesome questions flowing in here, and Jake's been crushing it in chat and queuing them up for our live Q&A here. So I will welcome Jake up to the stage, and we'll take this deck off really quickly here. One moment. Jake, thanks so much for joining us today.
Howdy, thanks for having me on. Excited to talk with you.
Wonderful.
Folks.
All right, well, we'll kick things off. Cuauh, there was one question that went in line when you were talking about the discount or how much off or under asking. Perhaps it would be good to talk through how you negotiate and what the due diligence process looks like. John was specifically asking, what was that a discount off asking price?
Yeah, that's a very great question, and it's not very common to see those types of discounts even in this environment. But I will say one thing: when it comes to offers and getting the best price, it really is somewhat of a numbers game. Every time we send out offers, there is a somewhat low likelihood that we'll get the discounts and that lowest price that we're looking for, which is why we haven't been able to bring on as many properties that we're bringing on, because we want to make sure that the prices that we get are the actual valued prices that our team and our team of experts agrees with. This one particularly, we also never know what the sellers are going through, right? This isn't the best time to sell property, so there's less competition on the purchasing side, and whether the owner is a flipper or someone that just needs to offload this property, a lot of sellers are, just taking their properties off market. They're like, well, I can't get the price that I want, so I'm just going to take it off. I have an incredible interest rate. Awesome, I don't need to sell. But that's not the case with everyone. So in this case particularly, obviously we started lower than what we got it at. At the end of the day, we say, look, our underwriting and our conservative figures say we can't get it at more than a certain price, and sometimes it does take a couple weeks, right, or a couple months actually, to actually close on a property at the price that we're looking for. We'll say, hey, we can't do it at this price. If you're looking to sell, cool. Otherwise, we'll keep looking and we'll keep going after this. So I think that's that offer price. There was a second part to this question that I want to make sure I get to as well.
Yeah, it was more around, I did see John ask the time on the market.
Yep. So, I mean, at when it comes, as I mentioned, we don't know what the sellers are going for. I think this one, let me pull it up here, was on market for probably around a month or so. Yep, at this point, 43 days, and we've been in conversations for a bit. This one particularly, we came in very early, if I recall correctly, and we went through the underwriting process. We let them know what we were willing to take it on. And at the end of the day, sometimes list price may not necessarily be the actual value. That's sort of what they were going through. We will then do an actual comps review of what properties have been selling for. There is also something to be said about a 2018 build and not having to deal with a lot of maintenance and some of these larger aspects as well. So that's what I'll say when it comes to that. We in these past couple of months, we've thrown out tons and tons of offers, and we're not upset that we're not getting those at all, because we understand what the market currently demands.
Yeah. John said, thanks. Just sort of massive, but you got it. Great questions. We so appreciate those questions. And it's for Cuauh. Thank you for walking through them in the process that you went through to acquire the property. I will say too, the Regal is now available and ready to invest in. Cuauh, when you were talking, I actually bought some shares behind the scenes. So that's available for you all to hop in. We haven't even sent out our email yet. So y'all are the first ones to hear it. We'll keep cruising through the questions here. I did see one. What other vacation rental markets are you looking at? So Cuauh, I'll kick this one over to you.
The markets that we're currently looking at. Interesting. Well, look, a lot of our investor feedback is that they want to get into new markets, going wide versus going deep. We understand that. As I mentioned earlier, there is sort of this seasonality component to keep in mind. So we are seeing that if, I would love to bring on a ski market right now, but, we have seen that some of the prices that are being asked for those properties right now is a little exorbitant. So look, without giving too much away, because I also want to be able to surprise and delight our investor base here, but we are looking into the Northeast. So we'll say that much. We would love to continue going into Florida, but there is a very stark insurance situation in Florida, and we don't want to delve too much into that. We've had a lot of success in Arizona. So all I'll say when it comes to markets, we want to take a look at regulation. Where are we able to get? And then taking a look at what are the deals and prices that we're able to get in those markets. I think that and the long-term investability of a market, right? What do we see? Where do we see this market in 5-10 years? So those are some of the factors that we contemplate into our new markets. But the only one I'll say right now is the Northeast US.
Wonderful. Always love a teaser. For any new folks on the line, we're currently in 33 markets to date, north of 200 properties. So we've had incredible growth in the last year. I think we hit 100th property in May of this year alone in Nashville, Tennessee. So that was just months ago. So the sky's the limit for properties, asset classes, anything that y'all would love to see within the platform as well. I'm seeing quite a few questions on taxes. I know we could spend hours in this space, and we have done that with the tax webinar. So Jake, I did see one from Jim and Michelle in here and a few other folks. The question specifically is, will we as fractional owners be able to deduct depreciation, bonus depreciation? Along the same lines, is the income we get from Arrive reported as rental income or a dividend of some sort? Yes, that was it. I was still reading the whole thing.
Yeah, so awesome. Lots of good tax questions. So I see Michelle's in the chat. Yes, tax forms will be provided. We basically upload 1099 DIVs into your Arrived investor account by the end of January. And you'll basically get one tax form that'll have all of the information you need, and it'll be consolidated. So if you invest in 10 different properties, you'll only get one tax form. The 1099 is a really easy and simple form. It's a drag and drop on a TurboTax, and it kind of automatically pulls in all the information that you need. As far as the tax benefits of investing in real estate, investors certainly get to benefit from depreciation. But the way it works might be a little bit different compared to those that have made other, kind of real estate syndicate investments before. Basically, the depreciation will limit the taxable income you receive from Arrived, but it can't be used to offset any other income you have from non-Arrived sources. So essentially, the depreciation will help you, but it can't be used to offset your other investments and whatever else. The neat thing about the depreciation is it allows you to kind of continue to collect that cash flow and get those deposits into your bank while limiting that taxable income. And any excess, tax losses can be used next year to offset future Arrived property gains. So that's a little bit on how the depreciation side works. because we can't distribute those losses, there isn't any bonus depreciation or kind of the extra depreciation, because it doesn't really help investors at all. And a lot of that just has to do with the way that the entities are all kind of legally structured out. One thing I'll call out while we're talking about taxes is that the arrived long-term rental properties are actually taxed as REITs, real estate investment trusts. And so there's a couple of additional tax benefits that REITs are able to take advantage of. The vacation rentals actually can't, because short-term income is considered active and not passive. And so therefore the properties aren't eligible to be REITs. So as far as investors go, everything will work the exact same. You'll receive dividends, you'll get a tax form at the end of the year. And you'll be able to kind of easily pull in the numbers to your tax software or give to your accountant. But that's just a little bit of the nuance of how the tax world works.
Wonderful. Thanks for walking through it, Jake. One note to mention, and apologies if you said this, Jake, but Cindy, if you do set up your account as a retirement account, you will not be able to invest in vacation rentals, but you can create a separate account, whether that be entity or personal. So just something to keep in mind. We don't limit the number of accounts you can have. Seeing quite a few other questions flow in here. I realized there was one from Harry. Any major problem that you guys are aware of with the property during inspection? So Cuauh, perhaps it would be helpful to walk through when you're doing an inspection, and any on this particular property and any that you may have walked away previously from.
Oh, yes, of course, definitely. So obviously, as part of the due diligence process, we do an inspection, we do termite inspection, we do roof inspection, we do foundation inspection. If the property is on septic or well, we also do well and septic inspection. So we do a full 360 inspection on the property. On this one, did not come across anything major. Obviously, there is some normal wear and tear, and we will always request those repairs and even go through like a secondary negotiation with the sellers if they are able to credit or actually fix repairs, some aesthetic or some light functional items. Nothing with this one particularly, but we have walked away from a couple of these properties that they look nice and they look well, but once you do some of these inspections, especially if you come across something sketch going on with termites, you don't want to even deal with that, right? If depending on the extent of that damage. So we definitely walk away from properties when we go through that process. Nothing with this one specifically.
Definitely. And the termite example, I remember way earlier in the year, Cameron and Jake and I were actually on a webinar together, and we had a property that we had offered on. And I believe at that point we built in like a 7-day walkaway period, and found out that the property had termite damage, which doesn't set up anybody for success. So we walked away. And to your point, Cuauh, that was a real life example. So Harry, great question. I very much appreciate the due diligence as well. I did see a comment in here from Monica. I actually would love to see Arrived go as deep as well, in order to build better expertise in a local, as well as stronger relationship with local property managers. So perhaps Cuauh, because right now we have like maybe one home in a market, 1 or 2, 1 to 3. I know we're expanding. What are your thoughts? Has the team thought about having, 15, 20, 30 homes in those markets?
Oh, for sure. So when I said we'll go wide, it wasn't that we're only going wide. I'm a big believer in creating density. There's a lot of benefits to unit economics, prices that we're able to get in some of those operations. So we're definitely looking to go deep. I think our deepest market right now is probably the Scottsdale area that we have 3 properties there, and we look to do the same in other markets. Part of going wide is, creating the network and the services that you'll need in each market to support vacation rentals. And so we're taking a look at some of those now, and we definitely want to get into the highest, what we expect to be the highest performing markets sooner than later. But we are definitely still looking to go deep in the markets that we're in. So 100%, I'm a big believer of that. I just wanted to make it clear that our investors do want to go into new markets, and I get that, but we want to do that responsibly, and we're definitely going deep as well as soon as we can in some of the other markets that we're in.
Yeah, so appreciate the question. I think it's from a strategic perspective. It's exciting to hear that, investors are thinking along those lines as well. So we develop that hyper expertise for different markets overall. So very much appreciated. Additionally, we'd love to hear in the chat. We'll just popcorn this around where you all would love to see a market in the future. So feel free to drop it in there. Would love to hear from you all. I realized there was one in here from Chris too around property management. Are you interested in local management partners similar to the manager of the Blue Ridge properties that you featured on a recent webinar, which was Bob? So I'd love to hear your thoughts. Wow.
Yeah, 100%. I mean, I'm a big believer in having that local expertise, but ultimately what it comes down to is what is a proven track record of a property manager, right? Or do they fulfill the requirements that we're looking for, right? Whether it's Airbnb Superhost, VRBO, Premier Partner, what are like Bonvoy, points partner as well, which are very exclusive. Like what are the benefits that we'd be able to achieve with a partner, and how willing are they to work with us on getting to a property management fee price point? What is the quality of services that we're able to deliver? What are the potential markets that they're able to manage, right? As a business, we also need to look out for our scalability aspect. And if we went around getting like one specific property manager per individual market, we'll end up with 100, property managers. And property management is a very complicated business, and so there is a lot of there's something to be said with working with a little bit more of regional partners. To the question, yes, very, very willing to consider, depending on what those conversations look like.
Definitely. I'm seeing some great mentions in here. Cindy mentioned Park City, Utah, Malibu, the Hamptons, Big Sur, Central Coast of California, like Tahoe, Orange Beach, Florida mentioned, but maybe without the insurance headaches. Trent mentioned. I agree. Asheville. Absolutely love these. Curious what your thoughts are. Like, what do you get most excited about hearing from people on the line here?
Different perspectives is awesome, and like just what people are thinking of in general is very exciting to me. I'm always asking, what are the markets that people are looking at, right? Unfortunately, some of these markets like Park City, if you're going to go in there, it's a lot of it has pretty much gotten priced in. So part of the play that we're looking for is what are the up and coming markets that haven't gotten to the price points of some of the Aspen, Colorado markets, right? Like there are some markets that if we went in, the revenues don't really match up with like the yield that we'd be able to provide or our investors expect. Not to say that they're completely off the table, but we'll just need to figure out a way to go into those markets again responsibly. But I like to hear sort of what people are thinking, because when they say Park City, I'm hearing ski, and we heard a lot of like ski markets, cabiny markets. Overall, we're trying to we're looking into very strong vacation specifically oriented markets right now, but also contemplating other short-term rental takes, whether it's for medical medical trips. There are other short-term rental worlds that we might be able to get into, but overall, always helpful to hear sort of what people are thinking. Why Park City? Why Big Bear? Why Tahoe? Right? I mean, I'm a Big Bear person myself, so I know why, but I also need to do a little bit more traveling when it comes to some of these Utah, Colorado markets.
Definitely. I don't know if you saw my eyes like light up because I saw the chat mention here. There was a mention of Mexico where you are today. So, Cuauh, I'd love to hear what your thoughts are on international expansion. And then Jake, perhaps you could touch on a little bit more around taxes and the reason why we haven't to date.
Yeah, well, I think the tax piece is probably going to be the biggest reason why not. I would love to get into international presence sooner than later. One thing that I have noticed in vacation rental markets outside of the US is that there is a big opportunity for capitalizing in some of those other markets. Like the US is obviously a very developed in the vacation rental space, but that isn't necessarily the case in international markets. So I think we'd be able to get some incredible yields in the international space. But then I'll have Jake tell us why we can't do that now. And I don't know if there's anything in the works.
Oh, there's definitely some international stuff in the works. I know we're looking at least one property that is international right now, but just a lot of interesting international tax law code to sort through. So our legal and finance teams are kind of doing some of the due diligence, but I think absolutely we would love to have some international vacation properties. So I love that. I love that direction that you're thinking, Lauren.
Me too. I was setting off like confetti over here. And I think that's two-prong as well. That's not only international property investment, but also internet, like folks that are not based in the U.S. being able to invest in Arrived as well. Because to date, we're only open to U.S. citizens or permanent residents. I will say, though, Mexico and Canada are our top two recommendations that we get from folks. So we definitely appreciate it. If there's a specific market within Mexico, definitely let us know. We have a few folks on our team that are from Mexico that are probably a little biased in the locations that we want to expand to first. So we'll definitely be sure to share more. I saw Cindy mentioned Costa Rica. Yeah, I'm ready to rumble. It sounds great. There was one other one in here that I saw. Can an investor stay at the vacation rental and get discounts? Cuauh, I'll kick that one over to you.
Yes, our investors can definitely book a stay at the vacation rentals. Right now, we don't have any discount program because we haven't found the optimal way for a discount to occur without, getting a discounted price that will, hurt the return of the investment, right? That for us, the priority is the ultimate return of investment. Even if Arrived stays, at a property, or any of us stay at a property, we're going to be paying the same thing that everyone else is paying. And so that's pretty much our take right now. Are we looking into a way to do that? Yes, but honestly, our priority at this point is, making sure that the properties perform as we expect them to. And if we did, roll out some sort of similar program to that, we want to make sure that it's in line with our mission, right? And do that responsibly. So, so the question, yes, we definitely encourage people to stay at our properties. If you're going to Scottsdale or any of the markets that we're in, definitely, and if the size and the property works for your trip, then of course, but no programs yet for discounts.
Yeah, it's a great question. We have our offsite, the company offsite, next month in January in Arizona at one of our vacation rentals, the Cactus. So we'll actually be welcoming any local folks to that property to come check it out. I will say too, as Cuauh mentioned, on each property page, we showcase like the expected time it will be ready. Once it's ready, we do list that Airbnb link right on the property page. So I'm going to drop one for an example so y'all can see it. I believe the Cactus was one that just came on the platform not too long ago. So I'm going to drop this property link for you all just to view. Awesome. And I see the 1099 div question. Jake, any color to add to that one? I saw you ping it in chat from Cindy.
It's funny, we've had that question come up before. You can't, if you're going to visit the property, in order to use it as a business write-off, you need to be part of the management team. And since investors are all passive investors, generally that doesn't fly. If you happen to have a business and you're doing a team offsite there, then that actually might work out. That's kind of what we're doing with our upcoming offsite in Scottsdale. Is Arrived is just going to pay investors because we're going to stay at the Airbnb, and we'll be able to count it as a business expense because it's kind of all team travel and, kind of work related. So disclaimer that I am not an accountant or a tax advisor. So any and all questions, please bring to your financial consultants and advisors.
Wonderful. Yeah, thanks for walking through it, Jake. And great questions, Cindy. We definitely appreciate it. We'll give it a few more seconds. If we missed any questions in the chat, definitely let us know. We'll do a few rapid fires here just for fun. Cuauh, you talked about perhaps what markets you foresee in the future. We've had incredible growth in the last year alone. Obviously, with a number of properties that we brought to the platform, growth in investors, I believe, is increased exponentially. I'm curious what your thoughts are for like how many markets you foresee Arrived being in 2023 and beyond.
That's going to depend a lot on what's the value that we're able to accrue, right? And then one thing that I mentioned heavily is, regulation, right? We need to be conscious that some cities, some markets are implementing regulation that isn't as friendly as we would expect. But to answer your question, I think we can, if things continue the way they are, and we continue doing the market due diligence that we have been, I think we can probably responsibly get into maybe 1 new market, 2 new markets a month or so from here through the next year. So call it somewhere in the realm of 20 to 24 new markets over the next year, albeit, depending on where we're seeing the best value, right? Sorry for blanking out on the name, but someone mentioned on going deep, right? That's also something that we're going to be going after, right? If we see a market is performing better than expected, right, because we underwrite conservatively, but say a market is just completely blowing it out of the water, then we need to make sure that we get more properties now before other investors figure out the secret and start jumping in there. So we're taking a look at that. We're always happy to take investor recommendations, suggestions. But again, we want to make sure that we're going into the markets that are sustainable and will perform optimally in the next 10, 15 years.
Definitely. No, so appreciate the forward thinking there. I know we've had some kind feedback in the chat as well. So thank you, Trent. We definitely appreciate it. I did drop a poll. Would love to hear from you all before we hop off the line. So would love to hear what prevents you from investing in more properties. I know Serge had mentioned, I do not like when there are no new properties on the site. And Cuauh, you just talked about obviously expansion. What are your thoughts on, we're releasing every 1 to 2 weeks, but having more properties like readily available?
Yep, I think that's just going to be part of us building a sustainable pipeline, right? Part of the thing that we're, and that's sort of building the rails so the train can go fast, right? And right now we're building those rails. We're looking at what are some of the partnerships that will allow us to manage effectively in these markets. AvantStay is, going to be a big part of that too. So that's what we're doing now. Once we have that, we already have the top of funnel leads and properties that we're evaluating on a daily basis. As we unlock some of these operational aspects, we'll be able to move a lot faster. And believe me, Serge, I'm with you. I also don't like when there's nothing on the site, because part of what we're trying to deliver is being product and an experience so that our investors are able to go into the markets that they are also bullish on, right? And part of that is offering different size properties, different amenities, different markets. There's a lot of this that goes into it. So I'm with you on that. And so for us, part of our responsibility is to build that constant pipeline, because there is the acquisition aspect is something that we've been talking about, but there's also the onboarding piece, right? We collaborate with our partners on what are the designs, furnishings, what amount we need to invest, get the property ready so it's a top 5% player in each market. There's a lot that goes into that onboarding. And so that's a little bit part of where that pipeline sort of begins to stall a bit, is the time that it takes to onboard and list the properties, submitting, requesting a permit. Some of those things are out of our control, right? And so we requested permits wherever they are needed, registering the property. So the pipeline is pretty extensive, and so we're doing our best to make sure that Serge is able to always go on our website and see something there that you might like.
Definitely. Thanks for walking through it, Cuauh. I so appreciate it. Yesterday we had our founder chat. So that was with our CEO, Ryan, our COO, Alejandro, and then Kenny, our CTO. And part of what they talked about is what keeps us up at night and what are you most looking forward to? And one of the biggest pieces was asset class expansion as well. So as you all know, predominantly most of our homes are single family to date. And then in September of this year, which feels like a year ago, we released 7 properties alone in the month of September. Now we are north of 14, I believe, roughly 15, 16 on the platform to date. The reason why I mention this is because, Jake, keep me honest on timing here, but like a year ago, it took a year or more ago, 6 to 9 months before new properties came on our platform. And we were the first company to have, like essentially a mini IPO process and be qualified by the SEC for each property. So since then, it has become incredibly streamlined. But that said, we totally hear you, Surgeon, wanting properties to be able to invest in readily. So would love feedback on any asset classes you're thinking of in the future. I believe workforce housing is on our radar coming soon. Any other asset classes, Jake or Cuauh, that y'all are thinking about?
I'll jump in and say one of the things that we're looking into is development. Potentially, how can we get a piece of land and, add some structure to that? We're always looking at what are the different asset classes, ways that we'd be able to create the biggest value add for our investors. Obviously, that comes with a different risk profile and things to consider, but I would say that's one aspect. Multifamily homes, something that we'd like to also consider in the future. But I would say those are 2 of the biggest ones on my mind, and just making sure that we do them the right way is going to be the challenge.
Definitely. I was chatting with Cameron the other day and I was like, parking garages, glamping tents, commercial properties, there's so many different ways to diversify. So if folks are interested in different asset classes, definitely let us know as we continue to expand. It's interesting with parking garages because you see in like major cities, like I think of Seattle, it's traditionally owned by older money. So getting into them is difficult. But once you do, it's such a lucrative asset class, right? And it's not quite as exciting as, a vacation rental or a single family home, but you think about the returns that can have over time. So appreciate you walking through it, Cuauh. I did see one in here from George that I would love to touch on because I think it's very important. So I'm going to kick this one over to you, Jake. And I saw you mention it in the chat. So Jake, I'm going to pose this question and then also what you and your team are working on as we head into 2023. So George had mentioned, I invested in one property 5 months ago and it is still not rented. As an investor, shouldn't we get an update on what is happening? What are the challenges? Why is it not rented, et cetera? Which is a phenomenal question to ask.
Yeah, it really is. And we're definitely working on some better ways to communicate more granular information to investors. A lot of it is just the challenge of, each individual property has different situations, different stories going on. Now that we're mixing in the vacation rentals too, of course, all the reporting metrics are completely different. So we're definitely going to be adding some more features in this general realm. In general, we've got 200 some properties, and of that group, the properties that are considered stabilized are properties that have basically been kind of through the acquisition process and have been listed for lease for a while. And of that group, I think we're 89% or 87% occupied. So, definitely the properties, will all end up getting occupied. We tend to start out looking for kind of the premium rents on the properties. And if we're not getting it, we'll kind of start to adjust the rent downward until we kind of find, what that market rent is. It's a great reason to diversify just because, we do our best, and 87% is a great occupancy rate, but it means that there are some properties that aren't leased up. So generally our philosophy is, hey, you'd rather own 15 different properties than concentrate heavily in one, because that way if there is some kind of extended vacancy for whatever reason, then you have a little bit of protection. The other thing to note just in general is that we are kind of looking and operating for the long term here. So even if the property does take a little bit while to lease up, we're really focused on finding the right particular tenants for the property and getting the rent that we want so that we don't kind of lock ourselves into a bad situation. Since we're looking for kind of 5 to 7 years on those long-term rentals and even longer on the vacation rentals, we really try to approach things with a long-term mindset.
Definitely. Wonderful. I know we're hitting top of the hour. So for folks on the line, thank you so much for joining us today, being so active in the chat. The poll questions go directly back to our team, so that the one actually came from our investment team. So we definitely appreciate hearing from you all. Cuauh and Jake, thank you so much for both prepared remarks and also for the Q&A today. If you have any other questions, let us know. support@arrivedhomes.com. We also have a little chat function in the bottom right-hand corner of our platform. I did drop a link. We have a State of the Market webinar coming up on Monday, so 12/19 with Cameron Wu, our VP of Investments. I dropped that in there because Cameron will also be walking through our strategy, how it shifted over the course of a year, heading into 2023, and obviously like the housing market and his thesis around it. So would love for you all to attend on Monday. Cuauh, Jake, any closing remarks before we shut the virtual doors?
No, just want to thank everyone for making the chat lively. Honestly, that's probably my favorite part of hopping in a webinar is truly interacting to the extent possible on here. So appreciate everyone joining us today and looking forward to the next one.
Yeah, thanks for joining, folks. That was fun and looking forward to owning these properties with you.
Awesome. Maureen, Cindy, Lauren, Serge, and everybody else on the line, thanks for joining. Cuauh and Jake, we'll see you all in Slack. Have a wonderful day, y'all.
Bye, everyone.